Good morning, ladies and gentlemen. I hope I'm audible. And if you could just confirm in chat that I'm audible, we can start with the session. Okay, great, perfect. First of all, thank you all so much for joining in. And the idea for today was to do an FAQ live session so we can have a repository of Q&A available online so that those who are asking questions in the comments as well as on the Telegram channel, all of these can be answered in one place. So please do leave your questions in the chat and we'll address them one by one. I've also prepared some of the questions that were asked on Telegram and we'll be answering that. Yeah. Okay. So the first few questions, a lot of them are about how do I select strikes for intraday strangles, why there's a stop loss, why there is hedging plus a stop loss. So, okay. Let me just go over that really quickly. Strike selection, more or less, for my setup depends on three primary factors. Let me give you the easiest way of strike selection. So in any setup, the things that work are the simplest things. And currently, if you want to sell a strangle on Nifty for weekly, what right off the bat, by looking at this, seem like a good set of strike selection? You can take the recent swing low, so something around 14,250, and you can take the recent swing high 15,400, and that gives you uh, the current range that we are sitting in. Now obviously that would be a very low risk low reward sort of strategy. So if you want to have a slightly higher risk higher reward, you can consider, okay, this was the point when sentiment was really bad. From there we had a massive gap up. From there we've more or less resumed an upper trend where we are at the higher range. So the bottom of this gap or the close before this gap up, so 14,500, very big psychological level, can be considered a support. And on the upper side, okay, you can say 15,000, very big psychological mark. We made this, we tested it, and then we broke down from there. Now potentially retesting. This can be considered a resistance. Now, this is very arbitrary. I am just right now just going on what the recent swings, highs, lows were. Now you try to equate that with how is the option chain looking. Now, from a pricing perspective, if you were to take a 15,100, 14,500 put, from a risk reward, your trade would be quite imbalanced. So depending on what kind of risk reward you want to define for yourself, you can choose to be either closer or further away from these resistances. So if you want to be safer and not have a bearish sort of strangle, you can be like, all right, 15,200, especially now that we have resumed an uptrend, kind of, that's what it looks like for now, should give you a good risk reward trade-off where you're like, okay, there should be good amount of demand towards 14,500 and there should be good amount of supply towards 15,000 itself. And as your view plays out, as the market plays out, obviously you will have to change the risk reward definition of your trade in order to balance it. So this is one aspect. One is what is the chart saying. Two is you look at open interest. So you see in the weekly, for example, where are positions building up. You can do this from any website. You don't particularly have to. Okay, so since not many positions have been built up yet, you can see 15,000 acting as a large resistance for now, and 14,500 is a good support. So this more or less shows you that in this range, there should be pretty good risk reward from the perspective of a strangle. Now, why do I set a stop loss? to get to that. Okay, why is there a hedge and a stop loss? So the hedge is mainly there as a drawdown protection. The hedge is there in so that the max loss is always defined. Because if you're sitting on a large position where your risk is undefined, you can't have peace of mind. Secondly, the hedge gives a lot of margin benefit. And thirdly, when you set a stop loss, people say, how do you set a stop loss? It varies from time to time. There is no hard and fast rule on how to set a stop loss. But think of it from this perspective. If I've sold a strangle, which is balanced at 30 and 30 points of credit on each side, and one of them expands to 50 and the other is trading at 10, then it is no longer strangle. It's a heavily directionally biased trade. And I do not want to hold on to one position till it reaches 50. But at the same time, that position, that option price might be in a particular range. So let us look at option price ranges. So let us say we take this strangle for next week. 15,200 on the call side and 14,500 on the put side. Let us say we created this strangle. It is trading in the range between, let's say, 20 to 30. So if I set my stop loss at 30, just small movements in the market might stop me out. Now, during the entire day, for an option to vary in 40-50% is not a big deal. But if I take this triangle, then I will probably set my stop loss at something like 35, 36. The reason for that is that it would actually require a big trending move for that kind of a stop to actually hit. So most of the time, my idea is to not let my stop hit because I'm not doing a directional trade. In case this starts expanding to 34, 35, if I take this trade and this call is now expanding, it started out at 24 and is now expanding to 35, 36, I will automatically have either taken in additional put side credit to balance the call side credit or moved away the call to reduce the amount of credit taken from the call side and also reduce the risk taken. This will vary. On a Monday, the way you would set a stop loss on this, for example, if I were to make this on a Monday, on this 24, I might set a stop loss of, let's say, 36, and on this 29, I might set a stop loss of 40, 41. That would be different from how I would place stop losses on this on the expiry day. And during the day, from the beginning of the day to the end of the day, the way you would place your stop losses would also be different. Because a stop loss is basically there for in case something that is against my view happens, then immediately get me out of this leg. I will see if it makes sense to re-enter again or not. Or during the momentum, do you actually keep a directional bias? So it kind of works like that. Anyway, so that one question has been asked many times, so I wanted to just address it very clearly before moving on to the next. Okay, how are you trading in such huge quantities? Okay, this is a question that I've answered before. I take benefit of MIS as well as hedging. So when you have hedging, you get margin benefit, and that goes a long way in letting you trade with a lot more. Roughly for me, I think per set of strangle, per lot of strangle, it costs about 55 to 60,000, and yeah, that's tremendously less than what it would cost you if you were doing it naked. On expiry day, finally you moved to at the money straddle. What was the reason behind it? Okay, with 30 minutes to go, if my view is that the expiry is going to be either at 14,800 or 14,850, and I'm currently sitting on a 14,800 and 850 strangle, the 850 call is trading for, let us say, 27, and the 14,800 put is trading for 10. In case my call blows up, my put will not be able to manage it. That is why, since my view was either a 14,800 or a 14,850 expiry, I moved to the 850 straddle and set a stop loss on the put side, which was very, very aggressive to get me out in case there was a downslide, whereas my stop loss on the call side I was not too concerned about. So it depends. Certain times it makes sense to straddle towards the end of an expiry. Certain times it doesn't. But if you are straddling the end of an expiry, stop losses are key. Okay, when do I roll away a call, or sorry, roll away a strike, or when do I roll towards? So this is a very simple question. The basic answer to that is, let's say I had a sideways view. My view is going wrong heavily in one direction. First thing I'll do is try to risk off in that direction. Then if I'm very convinced by that trend and I also want to participate in that trend, then I will risk on from the side that is winning. So uh, yeah, it's basically risking off and risking on, and how much conviction you want to give to any particular trend. Why do I trade Nifty and not Bank Nifty? I think this is purely a personal thing. I find that overall it's easier to manage the moves on Nifty than it is on Bank Nifty. Bank Nifty can blow up in matter of seconds, and yeah, I think it's more of a comfort factor. Bank Nifty, obviously, because it behaves such way, also has amazing premiums. You can like make a lot of money on sideways days on Bank Nifty, but it's just my personal preference to trade the Nifty. Why are stop loss orders market orders instead of limit orders? Yeah, the reason is, let's say I set a limit at 40 for a stop loss to execute. In a matter of seconds, options can move away from that price. And my order might not execute, in which case I might get really messed up. So slippage is the price you pay, and that's a price you should be willing to pay. Okay. How do you scale up lots or capital once you're comfortable with setup and consistency? Okay, so Vaibhav, a great question. We've gone over this before, but scale is something that's earned once you have very good confidence in your behavior at a certain level of capital, let's say at 10 lakhs, and you're able to return a good amount of money on it. Eventually, you can start using a lot of it into your trading. So overall, in my trading career, I've added about 30 lakhs to my account. That has been the amount of capital I've infused, and this was over 3 periods. So I started with 10 and then made it 20 and then made it 30, and everything else was from my trading profits. So for those who are asking what do you do with your trading profits, I'm most of the time it's just in my trading account, and I use it as I scale further. I've stopped scaling for a while now. I'm not scaled up in a while because execution becomes a problem beyond a certain scale, and I'm probably not that comfortable with a higher scale than what I'm doing presently, at least with the technical infrastructure that's available to me. And yeah, scale will come with time, and it has to be earned. If you reach a point where you go to an inverted strangle, how do you manage from that? The same way you manage any strangle. An inverted strangle is the same as um, any other strangle, so you manage it the same way. Okay, my daily routine. Okay, so my daily routine is I wake up in the morning, I try to catch up on news. I go through whatever data is available from the previous night in US markets, in commodity markets, gold markets, any geopolitical news or whatever. Try and look at that. Try to just review, because most of my studying happens the previous night. When I'm going to enter a trade for the next day, I plan for that the previous night. And yeah, then I wait for the market to open. I see if more or less everything is as per the hypothesis or not. I enter my trade. I spend my day managing my trade. In the evening, I spend time with family and try to go over any potential data that I can find, either from NSC or from news outlets. And yeah, it's more or less what my day is like. Um, my wife thinks I'm addicted, and I try to tell her that it's just a process. Yeah. Will Infosys fall more? I have no idea. I don't try to predict stock movements, at least. Uh, yeah. Can you provide tips for short strangle? I will be making video on short strangles and how I manage my short strangle. This video has been in the pipeline for a while. Sorry for the delay, but I will get around to that. That will be the next video that I make, which is not a live video. How do you control your emotions and psychology? Okay, great question, right? So, one thing that we need to get very clearly right off the bat is the market is a very dangerous place. And one great assumption to always make in the market, which unfortunately most people don't, is that everybody else is smarter than you, better than you, more well capitalized than you, more disciplined than you. That's a good assumption to make that, there's a saying at a poker table, if you don't know who the sucker is, you're probably the sucker. That's a good assumption to be in the market with always. Because if you don't do certain things, if you aren't disciplined, you will almost certainly, it's a matter of time, it's a ticking time bomb for you to blow up. There is no two ways about it. It just takes one bad day of being extremely indisciplined to completely end your stock market career. That being said, how do you work on discipline? This will basically be different for different people, but one factual truth is, if you don't have your emotions in control, and if you cannot split, because look, how can you have your emotions in control? You can have your emotions in control when you know what you're doing. When you don't feel like you know what you're doing and you're scared, fear is basically a reaction to uncertainty, right? And uncertainty in the market is different from uncertainty in you and what you're doing. If you don't know what you're doing, you will always feel afraid, and that fear will end up causing a lot more harm than it will do good. So it's a must do. How you get around to it is different. And there's also like this other analogy, right? um, I don't know if a lot of you have driven on highways, but when you drive on highways, Indian highways especially, you see that there are random people who walk onto the road, bikers cutting through. When you're traveling at 100 plus, there'll be bikers crossing over, whatnot. The first time you see all this, you probably panic. You feel, your heart in your throat, and you're like, okay, I'm gonna hit them. But eventually, as you gain muscle memory, your body automatically reacts to these situations without um, thinking too much about it or panicking too much about it. I don't know how many. So I'm from Bangalore, and we have the worst roads. And once you get used to driving in such horrible scenarios, you don't really react every time to something bad happening. Bad analogy, but more or less puts across the point that as you spend more time and you see different scenarios, and you feel like you know what you're doing, or at least you know that you will only lose how much you plan to lose. Um, and nothing you do will make you lose more than that. uh, you will get a better hand on controlling your psychology. My stop loss estimation, yeah, I've covered that. And basically it depends on a few factors, but invariably the idea will be, if I were to put it roughly, towards the end of the expiry on the last day, my stop loss on each leg will be the value of the strangle or lesser than the value of the strangle. My stop loss is, let's say, towards Friday for the next expiry will be something like maybe 25-30% above whatever the premium is currently trading at. And sometimes maybe more, sometimes maybe less, depends on the kind of market we're in at any given point in time. What is my biggest drawdown? My biggest drawdown is 15% on my entire capital, and that happened in March. Something you have to understand is I trade with my intraday trades are about 50% of my capital, not all of my capital. But March was a 15% drawdown on my entire capital. How do you start maintaining discipline and consistency? You do, or you don't survive. The market is not a fantasy place. Most of the time, a lot of us like to think that we're in this movie and we are the hero and we're going to succeed. We are not in this movie. Nobody cares about us. Market doesn't care if you're long or short. Market is a brutal place, and the only thing that works here is capital management. um, you know what, many people say which setups work, which setups don't work, which kind of trade. All setups work, all setups don't work. A lot of people lately talking about 90% traders lose money, 99% traders lose money. So simple analogy will be is find out which all setups they're using and do exact opposite. Will that make it work? No, it won't. Even if you do exactly the opposite of the guy who's losing a lot of money, even then you will not make a lot of money, because basic things like capital management, like position sizing, like knowing when to let your profits run, knowing when to cut your losses. There's this saying that invariably we like to be hopeful when we should be fearful. The example for that is when you're in a losing position, you're just hopeful that you make a little bit more, and then you can come out at break even or a little profit. And you're invariably fearful when you should be hopeful. Like when you're in a winning position, you're like, okay, how quickly can I take off my profit before it goes away, instead of like letting it run. So how to when to average out in Bank Nifty? I don't know what you mean by average out. in Bank Nifty? If you could clarify that. Yeah. Uh, See, so this Reason Console Trader app, basically it's a script that breaks down my orders. So my orders, since they are above, each order is above the NSE limit, Console Trader breaks it into multiple orders and lets me execute that in one go, which from an execution thing is useful to me. And yeah, this guy called Shiva developed it. He's a nice guy. He reached out to me, and yeah, I bought it from him. I don't have any affiliation to him. I don't have any tie up to him. I don't get any money if you guys also buy it from him. But I've shared his Telegram handle. It's on the pinned messages of our Telegram group. Okay, okay, a lot of messages. Effect of lot size change should not be much. The margins will change proportionately. It might increase liquidity to a certain extent, with maybe more people participating. But apart from that, when can a person be a full-time trader? A point when you don't feel like you're financially dependent on your job anymore. It depends. You can't be a full-time trader if you know you have to turn a profit that month uh, in order to make your ends meet and be comfortable in your life. Okay. Why does my strangle range keep decreasing as expiry day comes? It's because the risk reward for a strangle increases the closer the expiry is. So that's why the amount of uh, risk I take also goes up, because my reward actually proportionately goes up exponentially more. The reward side of things improves better towards the end. Do we roll options when counter position gains by 50% or purchase of or roll away? There are no specific percentages. Here's the thing: you can't be like, okay, if this happens in this criteria. No set system will work in every market. Most There are systems that can give you certain edges in certain markets, but if the idea is you want to be profitable intraday as consistently as possible, I don't work on like a set system that okay, only at 50% I look at a few things. I look at, okay, what is the change in price action of individual contributors of the index? What is the OI data signaling? What is the price action on the charts of Nifty as well as component signaling? So based on that, I might change the strikes, but it's not at okay, if 50% happens, then do this. I look at what Reliance is doing, look at what Bank Nifty is doing, and then come at okay, what will now happen to Nifty. If you watch my live trading videos, I generally try to say, okay, Reliance will move till here or Bank Nifty will move till here. That will translate into this on the Nifty, and that more or less is how I function with it. What if sudden 200-point move on one side and you don't have an SL? Then it makes me an idiot. If I didn't have a stop loss and there's a 200-point move, makes me an idiot for not having a stop loss. Can we sell expiry day 0.5 put and call with naked positions? You can. In a million times it will probably work, and the one time it doesn't, it'll probably bankrupt you. What are the best books that to read about the market? So I haven't been an extensive reader. I don't want to claim to have read a lot of books. I have read a lot of books on strategy and a few books on psychology, probably a lot of books on psychology and a few books on strategy. um, Depends on what you're looking for. I would recommend any book by Nicholas Taleb. I'd recommend you read Fooled by Randomness. I think it's a great thing, because let's be very clear: strategies never make money. Strategies don't make money. You give me the best strategy, you give a good trader the best strategy and tell him to do the exact opposite of it, you will notice that over a period of time he will probably lose less money or still make more money than a novice who is just trading with whatever position size they want, trading with whatever capital they want, having random target stop losses, not trailing profits, not cutting losses fast, not being impatient with losses. So Yeah, this moving average crosses there, or this retracement to this level on the Fibonacci series, RSI is doing this kind of divergence. All those are great strategies. You do the exact opposite also, you'll definitely make money if your capital management is right. I'm probably triggering a lot of people by saying this, but there are strategies that give you edges. There are very real ways of looking at price action as psychology of people. Price action is not random drawings on a sheet of paper. Price action is understanding what are other people thinking. And most of the time, you want to be on the side of the what the other people are thinking. There's some basic things. In an uptrend, buy the dip. In a downtrend, sell the rise. But invariably, traders will not do that. It's simple, so they believe it can't be right. And they'll be like, oh, it's going down. How much further down will it go? It's going up. How much further up will it go? This will be the thought process, but will never be like, okay, let me go with the trend at this point of time. Some setups do give you edges, but just because you're a great technical analyst will not make you a great trader. That is a massive misconception. You can be the best technical analyst and a horrible trader. Technical analysis is basically understanding psychology of people, nothing more than that. It's like, okay, these people have gone short here, they probably get scared at this point and start cutting out of their position. You can see they're still holding their position, right? So you're like, okay, they will get scared and run away. So that kind of stuff is what works. How do you manage taxes? I trade in a private limited company, so I have a CA who will basically manage filing the entire ITR, and yeah, there's not much else. You can have expenses. So the beauty of having a private limited company is you can route all your expenses to the private limited company, whereas you can't do that as an individual. For example, you go traveling somewhere, you go on a vacation, directors travel, directors stay, all of that can be booked as a this thing. Whatever you spend on, let's say you buy yourself a phone, you pay like heavy GST on it, that can be taken as GST input credit. If you there are a lot of things, like for example, the GST that I paid on my NSE transactions and whatnot, I can take that back as input credit. So uh, quite a few advantages of doing that. I think if you want to do trading long term, setting up a private limited company, very easy. There are many people who do it online with all the PAN, TAN, DIN registration, everything that you need, ROC filings, all that for 10 to 15,000. I think it's worth it. You should check it out. Uh, Please update my positions over Telegram channel before taking them. I'm completely against this. I don't believe that you will make money if you copy my trade. Actually, if you see majority of the time, if you take the same trade that I do in the morning, you will almost certainly lose money. And I don't want that to happen. People at this attitude has to change. If you really feel that you will uh, take somebody's trade, like you pay them and they give you tips or whatnot, even really good traders, right? You pay them, they give you tips and you follow them, you'll make money. You're kidding yourself. It's never going to happen. You should find a way to probably copy their psychology and their trading mentality rather than the trades that they take. How much time I took to learn trading? I'm still learning trading. I've been in the market for 5 years plus. I'm still learning. I don't think I've particularly learned anything more than maybe a little above average. How much drawdown per trade is recommended? Good question. Look at it this way. If you make big profits, uh, and most of the time you have small losses, that's fine. Once in a while, if you have a big loss, that's fine. If most of the time you make big profits. Let me give you an example. For example, if every day on, okay, let's look at it on a weekly basis. If every week you're returning, let's say, uh, 2-3% on your capital, then once in a while, in a week, you can probably afford to lose 3%. But most of the time, you want to lose less than 1.5% if 3% is what you're returning. If you're returning 1% weekly and you suddenly take a 3% weekly loss, then that is never going to work. That is just bad capital management once again. So if you make big profits most of the time, then you can afford to take small losses most of the time and a big loss maybe once in a while, but that big loss should not be more than the profits that you made when you make big profits. So that comes on to the capital management side, and it would not make sense if you make small profits and big losses, then you set up for failure. Okay. Gaming versus trading. What skill helped to be successful? I think, if anything, focus to a certain extent, because games are pretty intense, especially these days. I haven't gamed in a long time, but yeah. What do I mean when I say my position is balanced? When I say my position is balanced, I mean I have the highest possible theta to delta ratio. Means that a directional move at that point of time will affect me least because my delta will be close to zero at that point. Okay, these messages are just auto scrolling. Who is my mentor? My mentor is the market. I, I mean, from a market perspective. Otherwise, my parents, my family have had multiple mentors. Stock market specific mentor, I don't really have anyone that comes to mind. Why do I always write the trade till 3:20 and do not book profit and stop before 2 1 p.m.? Good question. The reason is, for me, this will vary for different people. If you're someone who always gets out at 2 p.m., then it's best that you always do that. But for me, I've always been someone who likes to ride the trade till the end, because towards the end, the risk reward really skews in the upward direction. And if you're able to manage your trade appropriately and using the right exit mechanisms, able to control it, it can be quite lucrative to stay till the end. Training program, not doing any training programs, because quite honestly, the most honest answer to that is I will not be able to do justice to it. I don't have currently the time and the bandwidth to put together something so comprehensive. I also get this question a lot of, will you manage other people's capital? I currently do not, and the reason for that is, I would be doing it in a very unstructured manner if I did. If at any point down the line, and right now this is not an immediate consideration, I do set up some kind of an alternate fund where I start taking investments, then I would want to do it with all the licenses and all the regulations and everything in order in a proper structured and formal manner. It's not a consideration at this point. If you're doing an expiry trade in case market rallies rapidly and then comes back, will both stop losses be triggered? Yeah, possibly. So you'll have to figure out uh, how to place your stop losses. um, yeah, I've answered this. Excel sheet trade terminal, it's just a script to break down the orders. I've shared the link to the creator on the Telegram group. If I keep my profits in trading account, I also do pull out uh, cash from my trading account. Yeah, I do take out capital. View on option buying versus selling. Look, once again, this goes back to what we were talking about: certain setups that work, certain setups that don't work. Whoever came up with this option selling is the only way to make money, option buying is the only way to make money, I don't understand it at all. If you see some of the most successful traders in the world, um, if you pull up a list, you'll find that every single one of them is an options buyer. Doesn't mean all options buyers will make money. It doesn't mean all option sellers will make money. There's a fundamental misconception that using a certain kind of trading makes money and a certain kind of trading doesn't. In fact, if you just look at, I mean, just check this out. Pull out the last 6 months of FII positioning in options and see if they're ever net sellers of options. For everybody who's screaming out loud that only options selling makes money, options buying does not make money, just look at FII positioning for the past 6 months, or actually pull out their entire history. You will always find that FIIs are always net buyers of options. And I'll tell you what, the risk and reward, at the end of the day, we get so stuck into this is a strategy, this is when it has to be adjusted, this is how the entire system works. That's a very wrong way of looking at it. The only way any strategy should be looked at is what is the risk, what is the reward, what is the entry trigger, what is the exit trigger. Option buying can definitely make money. There are very successful option buyers. It's just that on a shorter term, it looks like it's easier to make money by selling options. But if you survive long enough in the market, you'll figure out that no, whatever you've made in 6 months, you can lose in a day if you don't know what you're doing. And unfortunately, if that day happens to you in the beginning of when you start, then yeah, that's just very unfortunate. Okay, Greeks. Okay, Greeks, IV, theta. Okay, I'm gonna just go over one thing very quick. The Black and Scholes model, if I'm not wrong, came out around 40 years back or 50 years back, not longer than that. The Black and Scholes model is just a retro justification of options pricing. Options have been traded in this market for centuries. Much before stock exchanges existed, options have been traded from a farmer who wants to sell his produce to a factory that wants to buy produce to any kind of transaction, real estate transactions, whatnot. Options have been traded. Options are not a concept that got invented by the stock market. Now, the Black and Scholes model is just a way of simply making sense of what is happening on the pricing. Let me give you an example. Let us say I have sold a strangle worth 100 and the spot has not moved a single point. As per the Black and Scholes model, on that day, the decay that could have been expected in that strangle is 10 rupees. Instead of 10 rupees, if it decays by 15 rupees, then the Black and Scholes model will say IV has come down and it will put a cardinal value to it. If instead of decaying 10 rupees, it has decayed only 5 rupees, then Black and Scholes model will say IV has gone up. Greeks are a function of the price and not the other way around. So people who get carried and say when it is 0.5 delta, then you do this and whatnot. It's a simple way of explaining because most of the time it comes from the concept of what is happening in the price. But to a lot of new people, they consider uh, Greeks as the end all and be all of trading options, and that if you figure out Greeks, you're going to figure everything. And that is just not true. An option is only priced based on what somebody is willing to pay for it and what somebody is willing to sell it for. And only if they agree, they shake hands and they agree and transact at a price, is that transaction going to happen. This is a real transaction. It is not about what will be the theta on this strike on this day. No, there is a perceived risk reward there. The guy who's paying believes there's a reward by buying it, and the guy who's selling it believes there's a risk for selling it, and that is what defines the price of the option, nothing else. And obviously, if urgency goes up, if the buyer is feeling, oh, my reward potential is huge, and is willing to pay higher and higher and higher for it, then the price goes up. If the seller proportionately feels that at that risk he's able to meet him, he will sell. Otherwise, there won't be a transaction and the price will again move. Supply always has to find demand and demand always has to find supply. So all this, okay, Greeks are very good for explaining concepts to people who are new to the market, but don't make it the end all and be all of everything. So yeah, there's just a retro explanation. How many maximum lots you can purchase in a Zerodha order on the Nifty? 66. It's not a Zerodha restriction, it's a NSE restriction. Okay, please show how you are analyzing open interest. Okay, let me go over this 1 second. See, open interest is not a hard science. Looking and reading open interest is not a hard science, but it does give you a lot of inputs. Wherever you say maximum open interest, you can say that there is a generally considered stiff resistance whenever you look at the boundaries. Like right now, if you say maximum open interest is 15,000 for both the put side and the call side in the monthly, then that would mean that there is a lot of action happening around that level, and any big move away from that level could lead to some kind of a cascade. I'll have to make a full video on this. I don't think I will be able to cover it in this Q&A. So
I will make a how to read open interest video. Also, Ravi does some great analysis on the options data towards the end of the day. So you should check out the videos that he puts out. Where do you learn these things? You learn these things from the market. Like the ultimate teacher, you can, I mean, theoretically there's a lot of resources that we have also given. Zero the varsity is something I've recommended to everyone. If you come to our Telegram channel, which is fully free, we've shared a link to almost 100 GB of free books, everything from basics to a little bit more advanced stuff that you can freely access and go through. But at the end of the day, you have to learn from doing it, and you have to learn from doing it in the market. You can only learn how certain things work when you've, like I said, when you've driven on the same road many times, when you know uh, how different things actually function in the real market, you will be able to learn. The entire idea is if you survive for long enough in the market without blowing up, if you manage to do that, you will learn a lot of things. Also, this practice doesn't make perfect, practice just makes permanent. So while practicing, always ensure that you are very critical about what you're doing. Option selling with borrowed funds, don't do it. It's a very bad idea. Don't do options selling with borrowed funds, because the last thing you need is an additional pressure on top of your head to make money. Don't enter the market with the idea that no matter what, I will always make money. You will have some good times, you'll have some bad times. The idea is overall you should do well, but whenever you have a mental pressure to perform, like for example, if I'm not having a great time at any particular time, feel like I'm a little stressed out, because there's a concept of emotional currency, and I'll just go over that briefly. I take a break. I don't trade. There are been weeks when I just completely stayed away from the market, and you can't do that if you know you have to pay interest on money that you have borrowed. It's a horrible idea. Don't do it. So emotional capital, to quickly cover, basically to express emotions, right? It takes emotional capital, of which we have very limited quantity. To be happy also, it costs emotional capital, and to be sad, it costs two times as much emotional capital. um, and as traders, most of the time you're experiencing euphoria and sadness multiple times in minutes. Within 1 minute you might have 10 seconds of, oh yeah, this is good, and then 10 times of this is bad, and you're constantly exhausting and frustrating yourself. um, Eventually, even if you've been super happy and super sad, they don't balance each other out. It tires you out, you become frustrated, and that makes you worse as a trader. And to combat that, you need to take a break. Whenever you feel that you are not of stable mind, you are not being rational, get out of the market. It is dangerous. It is treacherous times to not be of the right mindset at any point. If you're not able to trade completely rationally, even the slightest inclination, you have to get out. I say a few minutes to go for averaging. What does that mean? I've covered this in a previous FAQ. Averaging is nothing but in the last 30 minutes, the closing price of the instrument on expiry is calculated as the weighted average of that period. So if Nifty closes at a certain point, rather in the last minute, if it ends somewhere, that is not the closing price of Nifty. The last 30 minutes, you need to take the average of that to arrive at Nifty closing. Yes, video on strategy, yes, that is coming. What is my edge in trading? I would say my edge in trading is capital management. That is the the main edge that I would have is capital management. And apart from that, I would say the ability to not be stubborn or egoistic with the market. Can you explain your positional trades? Yes, I will cover positional trades. This thing. Bro, please tell simple 3 to 4% risk-free strategy in Nifty month. There's no such thing. Uh, the thing is, anyone who wants like shortcuts, there are no shortcuts. Um, could you tell us about your mentor? I the mentors in my life have been my parents and uh, my wife and my sister and family. I don't have any particular mentor from a subject perspective. My education background, I have a commerce background. I have an MBA in finance, but I don't particularly think that has too much of an effect on entering the stock market. When do I adjust my strategy? I adjust my strategy when I am convinced enough that my view is not good enough to hold and that I need to take appropriate risk management steps. No course is being provided. No, I think the same question is there many times. I don't have kids yet, so yeah, if you make strangle with one lot, will you be paying too much in brokerage? Absolutely. Until your scale reaches 66 lots, which is one maximum order quantity, you will have diseconomies of scale with respect to charges. The government charges will remain the same no matter what, so that you can't do about. And majority of my charges is not brokerage. Most of my charges are just government related transaction charges, exchange charges, and all that. Till about 66 lots, you will have diseconomies of scale. At 66 lots, you will have maximum economies of scale, which means beyond 66 lot, doesn't matter. Your charges as a percentage of your uh, profitability will be the same. How do you use 20 DMA, 50 DMA while trading? It's nothing. You're using a short-term moving average and a slightly longer-term moving average. And general idea is if short-term moving average is above the long-term moving average, then the momentum is up, and inverse you can say momentum is down. Which option strategy is helpful in uptrend? Which option strategy is helpful in downtrend? Depends. In an uptrend, you can do debit spreads and credit spreads. So you can do bull call spreads, you can do bull put spreads. Depends on what your idea is, what your view is. Okay, there are a lot of messages. Ravi, if you could put on the slow scroll or something. Let me find it here. How do you zone off from financial markets? Yeah, great question. This is something that you have to do once again as a matter of discipline. Like if you're taking a break, if you're going on a holiday, if you're spending time with family, you need to completely cut off, switch off the financial markets and move on. Otherwise, you're going to frustrate a lot of people and annoy a lot of people because you might be very passionate about the market, but not everybody else is, and not should they be. So you need to make an effort to, and because it's not sustainable otherwise, you'll burn out and you'll burn other people out if you are unable to say, okay, now I'm on holiday, I'm going to focus on spending time with family, enjoying myself, doing other things. And it's really important that you do that. Have I ever been a directional trader? I don't know why most people think I'm a non-directional trader only. I do directional trades to this day. It's just that they're partly directional trades. If I wanted to do a cash secured put, I will do it in the form of a strangle. I'll sell a put and I'll sell probably a call which is one-fifth the price of the put. And that is my version of a cash secured strangle. And obviously, if there's an up move and my call starts gaining in value, it means that my put would have lost a tremendous amount of value. So even if you see my Reliance position, which I think last week I haven't really gone over it much, but it is a heavily directional strangle. Do I follow price action? Yes. What do I look at generally? I look at support and resistance. I make trend lines. I look at moving averages for more of the what is the current trend, and I do look at certain candles. I look at volume. So yeah, but I don't. It is not the core to my trading. My best and worst trade, I don't know. Like I think my best trade would have been the one that I had on Reliance for 4 months back to back, where I was able to get close to a 150% return by strangling and straddling a very tight range. And yeah, I had one on Indocent Bank as well for multiple months where I had a short straddle at 500 on Indocent Bank with great premiums. I think for 3 months I was getting a range of 350 on the downside and 650 on the upside, and that was really really good. For 3 months it didn't move from 500, and that was a very good trade. My worst trade, I don't know. I think my worst trade would have, I can't think of one specific instance, um, but probably in March, not being able to get out, not being able to manage. Yeah, just go to Telegram and go to the search for the terms 100 GB, and you will find a link shared where you will find a Google Drive with 100 GB of books. How much capital I started with and what is it now? Overall, I've infused about 30 lakhs, and since I've done options trading, I've returned about 10 times, um, give or take. Okay, okay, wonderful. I think a lot of the questions that we're getting now, we have already uh, covered. What motivated me to get into the stock market? I have covered. So a lot of these guys, I request you to also check out some of the older FAQs. They're much shorter and they answer a lot of these questions. So yeah, I mean, this only with respect to hedging. This question: Do you why do you hedge? It just gives you peace of mind, makes you a better trader. When you know that your loss, to whatever extent, is limited, it just makes you a better trader. You do more rational things when you know that um, one mistake and you can't. I just want everyone to just think about, on a closing note, right? So just think about it. This one thing. Let's say you have a naked position and you've been making a good 10, 20%, 30% return over a period of few months. Let's say you have a naked short straddle right now on the Nifty, thinking it's a long weekend. Imagine a situation where, and this is fully hypothetical and I don't mean any harm to anyone, imagine a situation where there's a political assassination of a big figure, or there is a nuke that is dropped. When markets open, they'll open at lower circuit, and they'll also open at somebody's bankruptcy, just because they weren't willing to give up a few additional points. Even if you're hedging really far away, hedge 500, 600, 700 points away, uh, that keeps you afloat, or at least gives you some chance of staying afloat. So and yeah, at that point you can roll your trade, you can roll it forward, roll it down, roll it forward by a year, still manage. You can do so many things to not completely blow up, but that peace of mind is very important. In fact, lately in these markets, I just think the overnight risk reward is just horrible, which is why I don't carry overnight positions on the index. I only do it on stocks, and that too when my view is quite medium term. So thank you so much for joining in. I tried to address all the questions that I could find. Some of these have already been answered in previous FAQs as well, so I'd ask you to check that out. And we appreciate the kind of support you have given us immensely, and look forward to your continued participation. Please do join our fully free Telegram channel, which is purely meant for discussion and community building. Participate. There are all kinds of new traders, old traders, experienced guys, people who are far more experienced than me, everybody on there. And the idea is we want to build like a good, nice community of productive conversation. So Thank you so much for joining in. We'll probably do another one of these down the line. Take care, have a great weekend, and I'll catch you next on Monday.